It's quite exhausting this week. Real roller coaster ride. What have you made of it, and what does it tell us? I mean, there is certainly a certain amount of brittleness we're seeing amongst the investor, and of course we just saw that fear and greed VIX index as well.
Well, I think a few things. First of all, obviously, it's been a lot of bad news in recent weeks, both in terms of Ukraine situation. Obviously, that's terrible. But at the same time, I think the global macroeconomy is still under some uncertainties, especially with the Fed looking to raise, well, has been raising rates yesterday. I think the key here is that a lot of these uncertainties are now starting to become to being addressed. So we know what the Fed is thinking in terms of its policy rate path over the next 12 to 18 months. We're now starting to see some degree of the oil market, energy market settling. Whether there will be more disruptions, that remains to be seen, but at least now we've established some kind of range. And then China, on Wednesday came out and acknowledged some of the challenges facing the markets and pledged to do something about this. Now, obviously, again, all of this depends on what China and Beijing is going to do in the next weeks and months in terms of addressing these issues. But I think all of these are giving investors a little bit more of a direction of where things are going to go. So from that perspective, I do feel that the global economy it's still on track to positive growth in 2022, and that would translate into a respectable earnings growth. And I think that's partly why investors are starting to feel a little bit more optimistic when it comes to risk assets like equities.
Tai, okay, yeah, on the one hand, we do have solid earnings in prospect for this year, but we can't ignore the spectre of inflation, can we not? And stocks do well quite often when there's inflation, but this has really come out of left field given geopolitical issues. So how do you navigate that?
That's a great question. I think inflation, it can cut both ways. Obviously, it does hurt consumers. It could put pressure on business costs, et cetera, et cetera. That's where I think active management becomes really important to identify companies who are efficient, who have good cost control, and who have a strong operational leverage in order to benefit, or rather, be resilient in this phase of inflation. And we did see, for example, commodities perform really strongly during the run-up in oil prices. So from that perspective, it's important to recognize that some sectors are more resilient in a high inflation environment. Some are going to be struggling a little bit more. And the key here is identify those sectors who do well. I think a couple of areas I see are still looking quite promising. For example, technology and healthcare, traditionally, they are less impacted by higher costs. But at the same time, manufacturing, production, some of the downstream businesses tends to get a bit more pressure from higher costs. So I think all in all, there's still a strong case for risk assets, especially the fact that government bonds continues to be expensive and risk to bond yields remains on the upside.
Tai, let's get your thoughts on China, because there was that big JPMorgan call that Chinese assets were uninvestable, and then we saw quite a turnaround, and we're seeing a pullback again today. It's really hard to keep up, and investors really want to see action followed up from those words from Beijing. JPMorgan's thoughts on China, is it uninvestable?
No, I don't think so. I think from asset management's perspective, we do think that there are still lots of long-term opportunities coming out from China. Obviously, the internet platforms is going through some regulatory changes, and we hope to see a bit more clarity from that perspective. But I think the important point is there are other sectors in China, for example, when it comes to renewable, when it comes to decarbonization, when it comes to potential rise of more middle income group in the next 5-10 years, I think that will continue to drive the Chinese economy. So from that perspective, I think where we need more clarification is, as mentioned earlier, the Chinese authorities have recognized the problems and challenges, pledged to address them. The next phase is going to be how the authorities actually implement those solutions, whether it's negotiating with the U.S. authorities on ADR, or as you guys mentioned earlier, how are they going to handle the COVID situation going forward.
Yeah, and that's also playing through into, of course, those really ambitious growth targets as well. What else are you recommending to your clients, though, amidst, I guess, all of the concerns that we are seeing at the moment and the war in Ukraine in particular?
Well, I think beyond China, I'm still optimistic on Asia for a number of reasons, especially, for example, in Southeast Asia, where ASEAN markets have underperformed for 2020 and 2021. It's been quite resilient in 2022 for two reasons. One, valuations is still relatively attractive. And number two, we are looking forward to the prospects of economic reopening from many of these markets, which domestic demand and the service sector have come under significant pressure in the past few years. So from that perspective, the ability to catch up from Southeast Asia and also the rest of Asian economies and domestic consumption, I think that's going to be a really interesting opportunity.
Tai, is this the time to be loading up on Chinese tech shares, given where they've gone, and of course, not for the short term, but for the long haul?
I think in the long haul, yes. I think, obviously, as we discussed earlier, there are still some uncertainties with regards to the status of the ADR and also where the Chinese authorities, going to go with this regulation. So, it's not perhaps, you're going to invest all your allocation in one day, but I think over the next, 6 months, 12 months, it's worth looking into some of these tech sectors. And don't forget, we will get more information on how these tech companies handle all the regulatory changes via their earnings results. If they prove they're able to withstand all the changes and be able to adapt and change, I think investors will give them a bit more attention. But obviously, it's important to recognize that these are still high volatility areas, and it's worth diversifying away to some of the more structural growth areas that we see in China.